Welcome back to the Ignite podcast. Today, we're delighted to have Andrew Gluck on the program. He's the GP, Reverend VC. Andrew, welcome to the show. Thanks for coming.
Thank you. Thanks for having me. I appreciate it.
Yeah, we appreciate you. Would love to get an intro from the man himself for the audience.
Yeah, for sure. So my background, just to give a quick overview, is really heavy in digital marketing, e-commerce. I spent about a decade in the space. In 2014, I co-founded an agency called Agency Within and grew to be one of the largest independent digital marketing agencies in the U.S. Worked with over 100 clients, had over 100 employees. Worked with a lot of brands that you're probably familiar with, enterprise brands like Nike, Intuit, Shake Shack, Spanx, Etsy, and then also a lot of startups, and got exposure to that space with brands like Goop, Rothy's, Helix, Bandier, Billy, Zola, Lola, Petflow, Trade Coffee, Twillery, and others.
It's amazing you can rattle off all those brand names off the top of your head.
Yeah,
I could probably forget all of them.
Well, that's like, I don't know what that was, 10 out of the 100, 120 clients we had over the years that I was there. Now it's funny, people will like mention a brand these days and I'll be like, oh yeah, they were clients back in the day.
Yeah.
Potentially still a client, some of them even. So did that, and that was after having been in the industry for a little while. And then in 2018, I had a successful exit from my agency and was trying to figure out what I wanted to do next. Realized, kind of looking at, the companies that I worked with, the teams that I worked with, I really enjoyed working with early stage founders and founding teams. And especially, again, at those earliest stages, there was something special and unique about that 0 to 1, about getting in early, about being part of, building, almost something from nothing that was just like exciting and palpable, and wanted to do more of that. And so started from 2019 to 2021 for about 2.5 years, started to angel invest and advise early stage startups. Ended up investing in about 25 companies directly, including companies like Lunchbox, Disco, which was Co-op Commerce at the time, and then companies like in the D2C space like Caraway and Branch Furniture and Cadence and Cheeky, and did pretty well there. Really enjoyed it. Not it wasn't surprising to me, but really enjoyed it, and so that was great. And so decided to continue to play in that space. Ended up going out and raising a fund, early stage fund, focused on kind of continue to do what I was doing as an angel investor, but a little bit more, I'd say, on the B2B and tool side. So ad tech, e-com enablement, next gen commerce, vertical SaaS, and things like that. So yeah, that was at the end of 2021, raised that fund, and have now.
Perfect timing.
Yeah, it was a good timing to raise a fund. I originally set out to raise like 5 to 7 million, and I ended up raising closer to 9 million.
Nice.
Deploy
for the first fund. I mean, if for the listeners out there, that's a really impressive. Coming from outside of venture land, from an agency, and having a first time fund and successfully raising almost $10 million is knocking it out of the park.
Thank you.
I see a lot of really well connected people in a similar situation struggle to raise even 3 or 4 million. So.
Yeah, like you said, I think I was fortunate timing wise. I was fortunate to have a pretty good and impressive early track record as well. I had a good network that I've been building over 10 years in I had founders and some of them invested, founders that I worked with, found folks just in my network that I got to know. Got introduced to a multifamily office called Applecore Holdings that Anchor invested in the fund. And so, a lot of things, broke my way. So there's definitely, skill and things like that, but there's also a lot of, like you said, luck and timing. And then, raising it is only the beginning part. Deploying it and then returning it, and then 2, 3, 4xing it is the real challenge and real goal.
Yeah. And let's talk about a little bit about the thesis here. You rattled off some of the areas you like to invest in. Maybe you can break each of those down for the audience.
Yeah, so one area that I really enjoy, which is, a little bit out of vogue, maybe becoming a little bit back more in vogue, is what I'll call like ad tech.
Mm.
And so ad tech has like a little bit of I
A
don't
little
know,
bit of a cycle to it, right?
yeah, a
Every
little bit of a
5 years, 10
cycle.
years, there's like new technologies that sort of unlock and
Totally, and then I think there's also a little bit of like some negative stigma around it. I think there were a lot of smart generalist investors who invested in things that were quote unquote ad tech, but weren't really what I would call ad tech. Um, they were more just solutions for helping marketers necessarily than really like hardcore ad tech.
yeah.
When you think about, from like the 2010s to 2015 or so, 2017 or so, where people were investing in things that, in some ways was obvious to any marketers that the ad networks themselves would build some of these tools, and develop some of these tools. Um,
This must be how
or
we got originally connected because I worked at Rocket Fuel like 10 years ago. So I was a little
yeah,
PM
definitely
at Rock.
possible.
What's that?
Um, yeah, I mean, yeah, I think ad tech, like I said, has a little bit of the stigma attached to it, which to me is fine. Doesn't really bother me. And so I really like investing in the space, because it's a little bit out of vogue. So it's a little easier to become,
Hmm.
a little bit more well known and sought after in the space, if you talk about it and you're out there. And then also, you can kind of cut to the chase a little bit more quickly, with founders, because unless they have like a deepish understanding of the space, it becomes really challenging to
Yeah.
build in the space, because there is a lot of like layers and components to it.
Yeah. Yeah. And the ad tech ecosystem, I think, maybe you could describe why it became out of vogue and, what year that happened and why do you think that is?
Yeah, I think it became out of vogue. You had a lot of investors invest in things that were not really ad tech. There were more um, generalist solutions applied to marketing and for marketers, and less actual ad tech. And some of those were like, layers or tools that would help you bid on Google or bid on Facebook or optimize XYZ, or a better way to, and you're a little bit seeing this now with some of like the AI creative generation stuff too,
Hmm.
which is, there will be winners in the space, but I think it's going to be a pretty fragmented market with that becomes relatively commoditized.
Yeah.
Um, right, where it's like if you want to build a tool that can be, kind of commoditized, but maybe someone's paying, per seat, per license, somewhere between $9 and $49 a month. You need to be pretty broad, right? You need to be like a Monday, or kind of like a workforce tool that's for everyone and not just specifically for one segment. You can have one segment be your beachhead for sure,
Yeah.
an entry into the market, but it's a little challenging to build, just for marketers,
Yeah.
if you're not really building something that's, um, if it's a workflow tool, it's got to be pretty broad and not just for marketers. If it's an intelligence tool, this is something that kind of builds over time. That there's network effects through the data that they're collecting and optimizing against. And there's real intelligence in terms of the insights and learnings that the tool is gathering and capturing. That are also, they have to be something that you could do that no one else can do,
Yeah.
right?
Yeah.
In some way, doesn't mean other people aren't going to try to do it, but you need that to really build, um, you know, an ad tech solution
Yeah.
that's going to be you're going to be able to charge a good amount for. And the reason you're able to charge a good amount for is because if you're able to create something, your ad tech's generally, closer to the revenue side of the business. So if you're closer to the revenue side of the business and you could prove, an uplift in revenue, then you could capture, a percentage of that, right?
Yeah.
The one thing I look for is, what I'll call like the three C's, right? You have to create value for your customers, right? If you're, let's just say B2B, app, B2B SaaS tool, B2B, you have
Yeah.
to create that value. You have to capture that value. So you have to earn the right to capture the value, right?
Mm.
So if you're a tool that a lot of other people are tackling the same problem in lots of similar ways, and you're not that unique or special or differentiated, again, if you're workflow versus intelligence, and so, oh, I can use you, but I can also use, something else, then it becomes hard to capture that value, and then you have to
Yeah.
communicate that value, right? You have to have a way to
Mm.
constantly communicate that value, whether that's, I'm seeing more and more companies hold the consistent, even after they win a bake-off or whatever it is, and a normal, 50-50 A/B test tool, A/B test, they
Yeah.
might hold a consistent 5% holdout for a control. So they're constantly, every month, every week, every day, able to report on, here's all the people that are getting the treatment that we use that, for the tool.
Yeah.
And look at how they compare to the 5% who don't. And it's a randomized control. And so that way you could constantly communicate that value. Again, it goes back to being able to capture the value so that
Yeah.
you earn the right to capture that consistent 5 to 15, 30% of the value that you're creating. And then also be able to communicate it to, potentially new customers as well and prospects.
Yeah. And I love that framework, the three C's. I've never heard that. We'll definitely
Well, I made it
and
up. So, I mean,
create, capture, communicate.
yeah,
I think that's a handy framework. Yeah. And it's kind of like when you're evaluating a company, you're trying to figure out, yeah, are they creating enough value, removing friction? What's the savings here, or the additional performance in ad tech, as you described, with the
right.
the holdout and the treatment and stuff. Yeah.
And it's funny. I posted online like I started my first job out of school the day after the Super Bowl. I graduated in December, and it took a few weeks to find work or whatever. So I'm like, it came up on that anniversary, and like one thing, like I don't know if I just kind of sought it out early on, but it just always been on very much the revenue generation side of the business. So
Mm.
I'm always down to save money. Saving money is huge. Being able to do things like that. I've seen
Yeah.
a few companies out there help you save money on AWS, help you save money on, on staffing, on hiring, on, all these different things, on insurance. And all those are great, but there's something about being on the revenue generation side of the business that lets you, that for me is more exciting and fun. And then also I think lets you, again, capture more of that value in some way.
Yeah. As you're evaluating companies, how do you know when the AI hype is real? Let's just take it from an ad tech perspective right now. I see a lot of companies where they're like, okay, it's like this, but with AI. And then you're kind of scratching your heads thinking, okay, why can't the incumbent just layer in some AI?
Great.
How do you know when it's actually going to create
I'll
a
give
moat and be
you, yeah,
differentiated? Yeah.
I'll give you three examples. One is a company I passed on, so I won't say a name, but I passed on investing in them, but I did send it to a brand to test out as a tool. So I think the tool makes sense. They're doing email creation and automation, right? So for 200, $300 a month, they will look at your website, look at your previous emails, and come up with email ideas and suggestions, craft the email, have it ready to send out, right? Sync to Klaviyo. And I think they can get you 70% of the way there. So you still need, hands on keyboard. And you still probably want hands on keyboard there. But it makes a ton of sense for this brand to test out because they use a consultant. So, the idea actually isn't even necessarily like saving money. It's just, hey, can we send more emails and do more, by leveraging this tool?
Yeah.
Now, why did I invest in it? Because I think it's something that, A, I don't know that there's a way to build a defensible moat there. And B, I
Right.
do think it's something the incumbents will do themselves, whether they go and acquire someone with a specialty in the space or, Klaviyo just looks at all the emails that have been sent. There'll be questions around, are we leveraging, pooled data or from other brands and looking at subject lines, and you're using my data to train this, and you're using data from my brand to train your AI that you're then using that a competitor is using.
Yeah.
So they'll probably have to answer some questions around that and put up some walls and safeguards, firewalls and safeguards around how they use the data and things like that.
Mm.
But I think that they'll do it. There's no way I'd be surprised if it's not on the roadmap. And then I'll give you two examples of companies that I've actually invested in. And listen, I'm a VC, so I'm going to talk about my book. That's part of the job. Um,
As you
I
should.
recently invested in a company out of Israel called Visually, and Visually is a WYSIWAG, or what you see is what you get design tool. So if you want to do conversion rate optimization, you can leverage Visually without a designer, without engineers, and that way a marketer can set up their own testing tools. Now, are they going to use AI eventually? Yes. The idea is, hey, they're already at a point where they're, surfacing ideas for tests based on the data that they're collecting, right? And so, hey, we're eventually going to, leverage that data and use, whatever you want to call it, AI, big data, algorithms, do all that in order to come up with ideas for tests, actually give you a projected, conversion rate improvement or CAC decrease improvement on these tests, and then eventually just autopilot run these in the background type of situation. And so like that's pretty cool, and one where will and can some of the competitors, can they do that? Potentially, yeah, too. But I think it's one where, over time, there's not a ton with this visual editor that's this wedge into, which they've been able to sell into both large enterprise, mid and SMB, where if you combine that, where over time you get the learnings, the network effects, and you can really get going, where there's potential to build a moat and
Yeah.
adaptability.
Yeah, that's interesting.
Yeah.
I do a lot of MarTech as well because I have the similar background to you. I built a lot of ran demand gen teams at startups and, built MarTech, ad tech, sales tech tools over the years, and a lot of AI powered stuff, obviously Rocket Fuel and Conversico was a sales chatbot that would follow up with
Right.
leads using AI and stuff like that.
Yeah, it's funny. Someone that I saw I think on Twitter yesterday, someone posted like, I'm getting tons of cold outbound
Yeah.
from all these AI tools, and like, who's making the tool that filters out
Yeah.
all the ones that are relevant, right? So it becomes, a game of like, of chicken among the
Totally.
AIs almost, right? And so it goes back to that question of like, will AI impact these industries? Like, there's no doubt about it. The question is like, who owns the training data and models? Is there anything unique or proprietary that makes them work better? How do you build moat and defensibility over time through through network efficiencies, through gathering more data, through other things like that? And it's hard. It's hard to do that.
Yeah. I think what you're describing, and I've had some people on podcasts say this, is the end of technological moats. Because you have copilots and AI that can help you code 10 or 100 times faster. A lot of developers say, hey, I'm at least 30% faster. And it's all out there, right? It's all out there for you to grab and kind of modularize together. And so I think what you're describing is like the moat is no longer who can build the better mousetrap. It's kind of like who has the better materials that go into the mousetrap,
Right.
like the data and, the network effects and things like that.
Right, and a lot of these tools are using other people's materials, right? So
Yeah.
it's like if your materials aren't better, if you're using someone else's, LLM or data set, and AI, and you're, for lack of a better word, a wrapper around some of that, it becomes harder to build a long-term moat. Listen, um, can you over time find a way to build a moat that's not reliant on that component? Yes. I think the question is just like, what is it? And I don't have a great answer for a lot of these tools. If
Yeah.
it's UI UX, for B2B is UI UX isn't the most critical. Yes, I want the thing that's easy to use, but
Yeah,
I
look at
don't need the
Microsoft. Their UI UX usually is second or third best, and they're still
yeah.
winning. So why do
Yep.
they win?
Yeah, because the product's better, right? And the results, right?
Yeah,
When I'm in consumer, I care about the UI UX because that is the product. The
Yeah.
experience is the product, right?
Right.
In a lot of
The
ways,
speed
right?
of it, the feel of it, how it works. Yeah.
That is the product. But in B2B, the results is what I'm buying, not the
Mm,
tool, right? I'm buying the
mm.
results. And so I care about the results more than the tool.
This is why I don't invest in consumer. I'm really bad at judging, I think, how beautiful the design is, but I'm a lot better at judging the results. Um, it's interesting, this AI thing with cold outreach that you mentioned. I had somebody else on the program, a portfolio company that just pivoted. Actually, they were doing cold outreach, having a lot of success, and then they realized it wasn't really solving the core problem that the customers had. Right? Is you can do whiz bangery AI generated cold outreach, but they realized that the customers weren't seeing any bottom line results because all you were really doing is improving your open rates and your response rates, but your demo rate was the same. So like you have to find people to actually want to buy your product and have that problem. It's not necessarily like you're making your ads better. Well, great, my ads are better, more people are clicking, but are more people buying? Ultimately, you're buying results, like you said.
And so they pivoted to something that was helping you find the right audience and the right buyers.
Yeah, in one case, one I have two portfolio companies. One pivoted to doing sales training, and he's going to be back on the podcast in March talking about that pivot and why
That's
he did
cool.
it and all that stuff. So we're going to dive into that. And then another company started with the same approach, the cold outreach, um, before we invested, and we're going to make the investment now. And they pivoted to more of a sales follow up approach. And so that what they realized was like keeping leads warm and having a reason to reach out to them takes a lot of account exec time. Just kind of keeping like, okay, we have these 1,000 target companies, and they appear on a podcast, or they, have a press release, or they talk at an
Yeah.
event. And so putting that in like almost like a feed of like to the account rep, here are ways to reach out to this target account, this target customer.
Right. And
Um,
it's probably also something where it gets you 70, 80% of the way there, where it's like as an account exec, I have my, new people coming into the pipeline and then I have these warm leads, like you said, I probably log into this dashboard. Here's, today's
yeah.
10 warm leads that you're supposed to reach out to because it's
Yep.
been a few weeks. Here's three things that they've talked about. Click these three things, throw it into an email, and we wrote 80% of the email for you. And then, adding
Removed a lot
something
of
that did
friction. You're 80% faster because the
exactly.
research is done for you. The email is kind of drafted for you. And it is really like a follow up co pilot
Yeah,
in that way, which is kind
yeah,
of cool. What else are you excited about in ad tech? What do you see in the next few years? What do you see happening now?
yeah. I mean, uh, one space that I'm excited about in ad tech is actually trying to figure out how to monetize some of these AI tools. So I invested in a company called Open Ads. They're building
Mm,
out an ad network for AI generated content, and so they're starting some pilots in the next weeks, months with a few of these, big AI search engines, if that's what you want to call them these days, on these AI tools, because they have to monetize also, right? And it's funny that ad tech gets such a bad rap. You know, think about how large, you know, I don't know,
yeah, it's like a $500 billion industry,
97%
right?
of yeah,
Yeah.
97% of Google's revenues there. Uber just crossed $1 billion or will cross like $1 billion in annualized run rate revenue in ads this year,
That's
probably or
crazy.
next
Yeah.
year.
Did you know
Amazon,
Amazon bought the rocket fuel assets from Seismic?
yeah, exactly.
Yeah.
Like Amazon,
That's a $10
I
billion
think $10 billion
Yeah.
run rate. Instacart, right? If you're in the grocery business, you don't sell groceries, you sell ad space, right? And like you might think, oh, that only applies to digital, but like grocery stores make money on slotting fees, right? Which are
Yeah.
basically ads. They're in-store ads and placements, right? And
Yeah.
so
Physical ads. Yeah.
yeah, so it's just interesting that there's such stigma around it, yet it's one of the best business models that to exist is, hey, we give you something, essentially for free at cost, whatever the case is, and the way we monetize is taking some of your attention and tying, tying users, to those products and tools. And so and the margin on it is great also, right? The at least the gross profit percentage. Um, is 95%, 99% on ads, whatever you want to call it. So
Yeah.
it's funny that there's such angst, anxiety, negativity towards ad tech when it's a great business model and growing, and you see that it works really well for large companies and small companies too. So
Yeah. I mean, it's the oldest profession, right? Is sales.
I
It's,
guess you could say that because
yeah.
before the act you have to sell yourself.
It's not the
So
other thing that is usually
right.
said. It's actually sales. You're actually selling first. And yeah, if
Sure.
businesses fundamentally come down to I'm either building things or selling things, and um, as evident by the $500 billion industry. How do you when you say ad tech, do you also lump in sales tech and martech kind of in that bucket, or do you
So
delineate them? Yeah.
it's a good question. I think for me, I don't know if this is like a fair way. That's just the way my brain categorizes things. Like some of what happened in the past and the negativity and again, it's very smart generalists who did very well and lots of other investments did not do well in ad tech is because they invested in more martech, right?
Mm.
Like tech for marketers, which can work and can be helpful. But again, I think you need to be very, very broad to be able to, not maybe that's your wedge and tool, but you
Mm.
need to go really broad. So I stay a little bit away from like what I would call like martech, although some other people have different definitions, right? I invested in led the pre-seed round in a company called Revenue Roll, which helps people identify anonymous users to their site, plus and get their emails, plus people that you may know that are already in your
Yeah,
CRM that
feels
you
like
might
pretty core martech kind of stuff.
right. You would call it
Yeah.
martech. Like to
Yeah.
me, is that martech or ad tech? To me, I guess it's martech because it's not really an ad, right? It's more on the marketing side than it is on the
Yeah.
ad side, and like that's what I think for the first I don't know few years of being in the industry, I um, my own interpretation of what was ad tech and was martech, which sounds like it's probably wrong, is how I've thought about it. So it's how I've internalized it. But you're probably, I think you're right, and that's the consensus is like that's martech, not ad tech, because it's not no one's serving the ad. They're
Yeah.
getting an email, they're stitching together this visit, and then to your either to your CRM or giving you the email address and putting it into Klaviyo. So I guess that's kind of martech. So I do martech.
And for the audience, what is Klaviyo and why is that important in the ecosystem?
Yeah, I mean, Klaviyo is the basically biggest email tool that pretty much everyone is using, or most of the big brands are using for marketing. They'll call themselves a marketing automation company, but it's really an email platform and tool. Um, and they're about 10, 12 years old. They went public, I think, like last year. They had a pretty decent IPO, though now it's not as good, but they're I think still worth $78 billion. So
Oh
doing
wow.
doing pretty well. I mean they do good revenue. They're probably doing a couple $100 million in revenue a year. Approaching 500 million or so. Um, and
How do they fit into the ecosystem with the Pardos or Pardots and the Marketos and the other marketing automation tools?
I think they've like eaten their lunch completely with all new brands that have grown. It's like
Oh.
Shopify. To make the analogy, right? It's like Shopify versus Magento and Demandware and all those,
Mm.
older legacy tools. Klaviyo is the new tool, right? If you're a new brand signing up, like, listen, Klaviyo is expensive, but if you have big aspirations, you're probably going to just sign up with them. Like
Mm.
they're the tool that everyone's using these days.
That's interesting. And why did they win versus these incumbents that got snagged up by the larger conglomerate kind of tech
That's
companies?
actually a great question that I don't have a great answer for and don't know the history so well.
Mm.
Um, I imagine some of it probably, if I had to guess, and this is really guess, probably had to do with um, some of the automations that they were doing and reporting and analysis they helped
Mm.
you do, and then also some of the integrations with Shopify. So it's like
Yeah.
probably a pretty symbiotic relationship in terms of the growth on both those
That,
sides.
that makes sense because Marketo historically kind of fell down in those areas and was very B2B focused.
Yeah,
So if
Pardot's not a name I've heard since I had I think literally one
Right.
of my clients at the agency was using it. Maybe two,
Yeah.
maybe two.
Yeah. I just threw that out there. I was like,
Yeah, yeah.
that tells you how old school I am for Martech. What are some other areas you're investing in that you like right now?
Um, one area that I think the question is like, what's your stage two, stage three on it is vertical SaaS.
Mm.
Um, One of my first investments in the space was a company called Lunchbox. They are a online ordering tool for restaurants. So if you order from a DoorDash and Uber Eats, Seamless, they take these heavy third party fees. Some of that is the delivery fee, which you're always gonna have to pay, but some of that is this kind of origination fee. And so if a restaurant can drive more and more of their traffic to their owned and operated website, then for ordering, then their margin's way better.
So rather
Customer
than going to
experience.
DoorDash and DoorDash taking a bunch of fees and negotiating
It's
discounts and
yeah.
all
I
that
mean,
stuff.
again, the best
Yeah.
analogy is like, hey, do you want to order direct from my website or do you want to order from Amazon? When you order from Amazon, I don't really know you. I don't get the customer data. I don't own the
Mm.
relationship. I can't bring you back. Can't give you loyalty points. Don't have any information on what you like and your preferences over time. And again, there's all these fees, which again, some of the fees justifiable, make a ton of sense, and you're gonna have to pay no matter what, shipping, pick and pack, all those things. Some again also make sense, right? Hey, you're helping this customer find out about me and doing some marketing on my behalf or surfacing my restaurant. Some less so, right? The guy who
Yeah.
orders from the restaurant every single week and is ordering from the same place on Uber Eats every single week instead of ordering direct, like that's a shame because the restaurant isn't able to keep as much of those profits as they should and could, and they can give you better stuff and you can
Yeah.
you know it's buying direct is always better. And so in order to do that, you need a good you need your UI UX to actually place the order to be as good or better than it is on these channels, and these customers are already trained how to order on Uber Eats and DoorDash. um, and so, there again, start with vertical SaaS, the solution for online ordering, web and app ordering, then do catering also, then do loyalty and email marketing and text message marketing and help on these things, right? And so, how do you expand over time? Um, just beyond like kind of that core wedge
Yeah.
case, which is pretty big and large enough, but also how do you own more and more of the stack for those customers?
Yeah.
And so vertical SaaS has always been something that's been interesting to me, and one that I've enjoyed investing in. So it's another space that I think is has potential. Where there's
Yeah.
still a ton of industries that are on pen and paper that should or on Excel and spreadsheets, and Excel's great. People want to rip on Excel. It works really well for a lot of things, but there are probably a lot of things that could be automated and done better with a specific tool
It's
for
kind of
for
like the Craigslist of software, Excel.
yeah. I mean, Excel. Excel is insane how powerful that tool is. Yeah, when
Yeah.
you think about it.
It goes deep. Yeah, it goes really deep. Very extensible. And I'm also pretty bullish vertical SaaS. Do you think vertical SaaS there's always opportunities there because there's these horizontal platforms that come along and kind of do a lot of things generally okay? Think of like a HubSpot or something like that. It's like this generalist platform for everyone versus someone comes along and builds a verticalized, vertical specific SaaS. Do you think there's always an opportunity there where like you unbundle that horizontal platform and kind of go vertical, or do you
I
think it kind of comes in waves? Or
I think there is. I think that there is, right? So HubSpot's a great example. I think they're very focused on um, SMB. And so, there's within there
you may call
a
that
lot.
segment SaaS, right? Instead of going Salesforce Enterprise, you would go HubSpot SMB.
Exactly. Yeah.
Yeah,
So, right, for an SMB, you're not going to want like six different tools. So HubSpot's a great solution all in one for a lot of these customers and a lot of these folks. Now, within there, are there TAMs? Are there industries with large enough TAMs to support, going after, a specific, kind of, let's call HubSpot, a CRM tool plus CRM plus tool, right? And I'll give you an example of a company that I passed on that's doing pretty well. That is probably was
A
looks
little anti-portfolio for you.
yeah, a little anti-portfolio for me.
Yeah.
Company called Shop Genie. So they're, if you want to take that example, they're almost a HubSpot for automotive shops, right?
Mm.
And so you have automotive shops, which is a pretty big
You're kind of looking
industry,
at it and you're like, well, what's the real TAM here? Because
right? So they're,
yeah,
I mean, again, the TAM was less of an issue. I think my question was more incumbents that were doing some of the back end stuff coming to the front end was part of the reason I ended up not investing, which doesn't seem to be an issue because there's enough to do on
yeah.
the back end on supply and invoicing and
Mm.
shifts and things like that, right? Like a lot of businesses have this, almost like a restaurant, like a front of house and back of house, right? Like
Yeah.
you have, kind of where the sausage is made and then, servicing the customer. And I've historically focused, kind of when we talked about like revenue generation and revenue on the front of house, which Shop Genie is. And, probably should have realized this, that they're being specifically focused on that is enough because you do need that ability to sell to the enterprise, but in a way that helps
Yeah.
them sell to the customer. That's different than, hey, we're trying to find these parts and figure out our inventory management system and how often to reorder this part and which supplier is the best and our scheduling for when we're
A lot of
doing
friction. There's
this
so
car
much
and that
friction
car
there.
and like
Yeah.
for that type of company that's handling that to move to the front end of handling customer inbound is going to be challenging. So I think that's
Mm.
a learning that I kind of take from this miss. But that's an example of a vertical SaaS tool where they're unbundling this industry from HubSpot, right? Where
Yeah.
now they're creating the website for their customers, which are these auto body shops, automotive shops. They're dealing with customer inbound with um, AI chatbots that
Yeah.
are able to do enough, right, to get you 80% of the way there, and then maybe even book visits and things like that. Because dealing with the calendaring, they're dealing with scheduling and pricing and all of that on the front end, which is kind of what you want. Then they're helping these companies with local SEO and marketing and expand beyond there. So it's pretty impressive what they're building.
Yeah. Yeah. I love that. Those lessons from your misses. And I don't know the answer to this. How concentrated are you in your fund? How many investments are you planning to make, and how do you think about concentration?
Yeah, I think you want to be concentrated enough, but not too much. I don't know
Mm.
if that's a good answer.
Yeah.
I found that that around 20 to 25 companies in a portfolio is the right amount for me.
Mm.
Making 10 or so investments, 8 to 12 investments a year is a good amount in terms of being a solo GP, being able to
Mm.
to source and diligence and then hopefully add value as well to these companies and keep up with them and understand where they're at and where I can provide value and leverage through my network or
Right.
my experience and maybe help them skip a few steps, hopefully learn from my mistakes instead of them having to make some of the same mistakes that I've made.
Well, the reason I
Is,
asked that is like
yeah.
if you had, let's say you had a strategy for like, hey, I'm going to do instead of one a month, I'm going to do two a month. Would you have maybe took the bet because you're now at a higher volume on this company that did well?
It's a good question. I don't think
Or was it just like a hard no when you looked at it, no matter
yeah, it
what your
wasn't
volume
hard.
was?
No,
Yeah.
it was I don't think it's hard to know if I would have invested in this company in Shop Genie. I don't think I got there on. I think the risk I saw was around some of these more established players with serious funding and serious
Yeah.
revenue and
Yeah.
connections to these shops already, and being able to turn on a solution like this was the main issue. It wasn't a question of do if I'd been doing more deals would I have done it?
Yeah.
Especially trying to think.
Well, it's
You know,
interesting, right? Because in this
yeah,
vertical SaaS, you have a lot of these incumbents, right, that spent years, if not a decade or more, building this horizontal platform like HubSpot. And now they're trying to kind of fit this legacy code and what they built into different verticals. And that's where the problem is, right? Is you can't move fast enough and adjust your legacy platform to all these verticals properly. And so you end up making playbooks and getting consultants. And this is what happens in the ERP space, right? With the NetSuite and SAP is you got to hire these $1 million consultants to configure this. And really the consultants, what they do is they come in and they say, here's how you're going to run your business now. You're like, well, that's not how we run our business. Well, that's how the software works. So you have to conform to the software.
Right, and then
So I'm actually,
the dog, yeah.
yeah. So I'm actually in diligence with a ERP startup that built this in house at another company, and they realized that they could go build all the stuff that NetSuite and SAP has in a fraction of the time for a fraction of the cost, be the low cost provider, and make it more modular and extensible with modern SaaS technologies, right? So I think that's kind of that's where that nimbleness comes when you bundle something together, and it's the kind of generally okay for everyone, and then a vertical player comes along and says, hey, I can build it with 5 or 10 years newer technology and really, really solve the use case end to end for this vertical.
Yeah, and I think it's not just that; it's the specialization, right? I mean, you see it with Shopify and all the apps that are built on there, and I invested as an angel investor in Skio, who's in the subscription space, subscription management for brands on Shopify and other channels. And Shopify has a subscription tool. Theirs is very, very basic, right? Theirs checks the box if you're a smaller brand starting and going, but for Shopify, they kind of have one of their early objectives, which I thought was always think is really interesting, is they wanted a very high failure rate of new customers. They wanted the barrier to entry of creating an e-commerce website to be so low that it was like pushing a few buttons,
Yeah.
where it was so low that anyone with an idea can do it. And then, okay, whatever, it's not working, fine, stop using Shopify or on to my next idea. So they have tens of thousands of customers that are, in this small, medium, 0 to 10 million dollars in revenue. And then on the other end, they have these Shopify Plus customers, and the Shopify Plus customer pay them a ton of money, but they have kind of almost this like barbell situation, and the Shopify Plus customers need solutions that Shopify check the box isn't going to be enough. So it's kind of similar in some ways where you have these tools. They're great for like you said, these large legacy people have been using them a while and over time, but the newer brands might not be a deal for, or even some of the larger brands as they start to move into new directions. They need something that's more nimble, and that's entrepreneurship.
Yeah, that's the creative destruction of capitalism and
Exactly.
startups, which is
Yeah.
just beautiful. It's the invisible hand. Andrew, this was such a great conversation. I could have talked to you for another hour. We'll definitely have to have you back on the podcast to talk about more of these trends and areas you invest in. I learned a lot through the conversation. Thanks so much.
No, I appreciate it. Thank you for having me on. This was great. It was fun to talk about. Some of the hits, some of the misses, some of the learnings, what's coming next, and yeah, we'll see what transpires in 2024.
Thanks again.
Appreciate it.